Good afternoon, everybody. My name is Heidi from National Flood Services, and in our session today, we're going to concentrate on grandfathering. A couple of housekeeping things before we get started. I have muted your phone lines. That does allow us to have kind of a quiet background without any hold music or anything like that. The bad part of doing that is that you can't ask questions out loud. So if you have any questions, you have any comments, go ahead and type that question on your chat line. I do monitor the chat line throughout the session. I'll answer as many questions as I can. Our session will not last the entire hour, so I'll have time at the end for questions as well. So as I go ahead and kind of look at what we're going to talk about today, I'm also going to go ahead and launch a poll, a standard poll for the beginning of any of our sessions, really helping us to kind of get to know you and to get to know what my audience is out there. So if you'll kind of take a look at those poll questions. The first is really letting me know what your job is within that agency. Are you an insurance agent, or maybe your office staff, customer service? Maybe you're an insured. We do have an insured who, a couple who like to join some of our sessions to stay informed, or maybe you're a marketing representative. The other is to kind of gauge what your flood knowledge is, whether you have basic introductory knowledge, whether you're in the intermediate line, possibly advanced, or maybe you are the king or the queen of the flood industry. Always like to know that. While you're answering that, I'm going to go ahead and take a look at what we're going to talk about today. First, we're going to really talk about map changes. And you're going to ask, why would we talk about map changes when we need to talk about grandfathering? In order for grandfathering to really be a consideration, map changes have to go first. And so it's important to kind of take a look at some of the specifics that surround those map changes, and that will drive our discussion into introducing grandfathering and kind of getting into some of those program details. So with that, it looks like a majority of our people on our lines are insurance agents, a couple are office staff, and our knowledge level, most people are intermediate. Next in line is going to be basic and then advanced. Hopefully, we're going to have some type of knowledge for each of those different levels. So I try to introduce items in an introductory range so that it's appropriate for those beginning folks, but I try not to forget about the intermediate and advanced as well. So hopefully I have something for everybody. As I did share with you, really to start any type of discussion about map changes, we first have to look at why a map changes and how that drives our discussion into grandfathering. So there are a couple of different things that are really impacted any time that flood insurance rate map changes. The first is going to be the policy type. So your policy type, maybe you started from a preferred risk policy and that flood zone is changing from your low risk into a high risk. That's going to disqualify the policyholder from that preferred risk policy, moving him into a standard policy, which could mean the submission of an elevation certificate. Your rates are also going to be affected by that as well as you move to those higher risk flood zones and moving from your preferred risk policy into your regular standard policy. So map changes really have to come first, again, before grandfathering can really be a discussion. Matt wanted to know about, he missed the polls and CE. The presentation today is not going to be for continuing education credit. I'm not able to do that in this particular session. So if you miss the poll, it's okay. Our session is just going to be for informational purposes. So now that we know that map changes are really very important and they have far-reaching impacts on that flood insurance industry, whether it be the policy type, maybe the requirements for a policy or the rates, then we get to then discuss the topic of grandfathering. Grandfathering is a program that the NFIP developed specifically for those situations when you have a property that starts out in a low to moderate risk flood zone and is remapped into that higher risk flood zone. So grandfathering is going to then recognize any policyholder who has either built their structure in compliance with the rules and regulations that were established once that flood insurance rate map was completed, and or have remained loyal customers of the National Flood Insurance Program by purchasing a flood insurance policy and keeping that policy in place. You'll notice that the terms built-in compliance and continuous coverage are underlined. That's because those are really the only two circumstances where grandfathering is going to be discussed and allowable. So grandfathering is really going to allow your policyholder to benefit with some different rating scenarios. A lot of times they're going to be less expensive rates than what you would figure if you're moving into that standard flood insurance policy. So with that, let's go ahead and introduce each of those different types of reasons to grandfather. Grandfathering means that that structure is built in compliance. So the flood insurance rate map was completed. The structure was built following all the rules and regulations that were enforced by that community. One of the biggest rules of compliance is elevated buildings have to have a finished floor at or above the base flood elevation. If you have a structure that's in an A zone, then it has to meet your enclosure guidelines if it's elevated with an enclosure. So you have to talk about your venting guidelines. Venting, as if you've joined any other session in V zones, is not compliant. So built-in compliance really means the structure was built following all of those rules. It is compliant. It is up to date with everything that needs to be done in the flood program. So how do you prove or show that that structure is built in compliance? And Audrey asked that question in our chat line. Well, here's some of the things that really have to be in place in order to prove built-in compliance. First is a copy of the flood insurance rate map that's in effect at the time that that structure was built. So let's say that my structure was built in 1982, and the flood insurance rate map that's currently in force was completed in 1980. One of the first things I need to do if I'm going to grandfather using built-in compliance is to find a copy of that flood insurance rate map. Second, I have to have the date of that flood insurance rate map, and that date is often located on the index of that date, and I'm going to show you where to get one of those maps in just a little bit. Also the flood zone. So take the property, mark where your property is on that flood insurance rate map, indicating that it's in an X zone on that map. Next, if there's a base flood elevation, also notate what the base flood elevation is for that specific area. A copy of the map panel, again, that's going to be on the key to that map, and then indicate if or what that grandfathering element is. There are two things that can be grandfathered, either the flood zone and or the base flood elevation. So those are some of the things for built-in compliance. And I'm going to launch our next poll to kind of get us into the question about those flood maps. So true or false? The only way to get a copy of a flood insurance rate map is through a community official. Kind of a trick question. I'm being a little sneaky because we haven't really talked about that, but I am about to give you a bunch of information in that area. We're pretty one-sided in our poll right now. So we have a majority of our folks who've answered our question that says false, that it's not true that the only way you can get a flood insurance rate map is through a community official. You can also go to FEMA. FEMA has a website that you might find very helpful in looking for these flood insurance rate maps. And that website is msc.fema.gov. And I'm going to go ahead and put that in our chat line. You can get your historic flood insurance rate maps. You can get current flood insurance rate maps. There's a ton of information out on this website, and it's sponsored through FEMA. I will tell you, it is not always the most user-friendly to navigate. While it's getting better, it certainly could be just a little bit more intuitive. So you would start by entering your address in your city, making sure that you spell it right. And then you're going to search for it. And then you're just going to kind of continue to drill down. It's going to give you, here's our current map. I can look at revisions. I can look at amendments. I can revalidate. Again, you can get pretty in-depth in your flood insurance rate map. And you can go ahead and print historic rate maps, so you can see what your effective date of your map is and have it printed. So I searched for historic products. I can search for your flood insurance rate map, and then you kind of just have to dig down into which is the current map, and then you're going to go ahead and drill down to where your property is. And then you can go ahead and create what is often called a firm map, which is you're going to take a snippet of that flood insurance rate map and you can go ahead and print it. So that's certainly one way of going ahead and finding a copy of a flood insurance rate map. A second really good resource for you is to check with your community officials. In the same location that you would go to check if the community has a copy of an elevation certificate, you can also go ahead and get a copy of a flood insurance rate map by going to your community officials. And this is going to be your floodplain manager or the section that is going to approve your building permits. So you can get copies of those as well. I also know some insurance agents out there who will often, if they have extra time, have some of their office staff go ahead and search for flood insurance rate maps. I know of some long-standing agents who just happen to love maps and keep copies of them. That's certainly not common, but it can be done. So those maps are out there. And again, if you're going to grandfather because of built-in compliance, your tool is going to be that flood insurance rate map. Rebecca wanted to know what revalidation is. It's just kind of the process of what the definition is. It's just validating the authenticity of your flood insurance rate map. That's something that I personally have never had to explore, but it's out there and available on the Flood Insurance Map Service Center website. So we've talked about our built-in compliance reason. The other reason for grandfathering is continuous coverage. So continuous coverage means that coverage was purchased on a property and for the time period when it was in a lower risk flood zone, and it was maintained continuously through the map change and through that time period where it's now in that higher risk flood zone. So your policyholder purchased it when it was non-special flood hazard area. They might have purchased it when it was a preferred risk policy, but through no fault of their own, community was remapped and it's now in a special flood hazard area. They've kept that policy in place. While the documentation is easier when you're working with continuous coverage, what's needed is a copy of a declaration page for prior years of coverage. Continuous coverage is sometimes harder to obtain because your policyholder is dependent on purchasing the policy in the lower risk flood zone and keeping it in force. If that policy has not been kept in force, if there's a lapse in that policy, then grandfathering because of continuous coverage is not available. So what exactly can be grandfathered? Only two things can be grandfathered. You can grandfather a more beneficial flood zone, or you can grandfather a base flood elevation. You cannot grandfather a policy form. So you start with a property in an X zone. The policyholder went ahead and purchased a preferred risk policy, which is really economically the best package. However, once that map change has occurred, then that policy in the preferred risk line cannot be maintained. They can grandfather, and then that policy can take the more beneficial flood zone in an X zone, but it can't keep the preferred risk policy rate. So what will happen is it will be re-rated. It will have standard rates, but they can grandfather that X zone. So your standard X zone rating is going to be a lot less premium than if it had to be rated in that higher risk flood zone, which could mean also obtaining the elevation certificate. A couple of things are not going to be eligible for grandfathering. Non-compliant structures is one of them. Non-compliant could mean that that lowest floor is below the base flood elevation. So let's look at a structure that's a basement. A basement has its lowest living floor below the base flood elevation, which is against your floodplain management regulations, which could mean then that if your structure has a basement, grandfathering is not going to be an option. Also look out for substantially improved or substantially damaged structures. A substantially improved structure is a structure who has undergone improvements, the cost of which equals or exceeds 50% of the market value at the time construction started. So your policyholder is going to remodel, and they do a major remodel. That could be substantially improved, which means that your date of construction is going to change. So if our structure started out in our X zone, it was remapped and then they started to improve that structure and it was substantially improved, our date of construction could be in the time period when it's in a special flood hazard area, which means that grandfathering not going to be an option. And I already indicated that policy forms not able to grandfather. So the policyholder cannot keep that preferred risk policy. However, they can write a standard policy in that X zone. Couple of questions. Let's take a break and answer some questions. Would this be the reason for statement of variance form to be completed? Yeah, Roy, that's one reason why you would need that statement of variance. A statement of variance form, for those of you who are kind of new, is really a form created by the community official that states that they allowed the structure to be built varying the floodplain management rules and regulations. If it was built in an X zone with a basement, would it qualify for built-in compliance? No, it would not. Basements not going to be eligible for grandfathering because they're not compliant. And that's kind of across the board there. If it's not a compliant structure, not going to be eligible for grandfathering. Nora was looking for a copy of the presentation. Nora, I am unable to provide that. However, I will at the end show you where you can get some of the material and most likely a copy of this presentation in the recorded form. Peggy Hoffman, how many prior flood declaration pages are needed to be submitted? Peggy, the requirement really is only one, but you want to make sure that you can prove that there is that continuous coverage without a break. So if that means you need 2, if you need 3, you can do that. One thing about continuous coverage that we should probably talk about, and Peggy's question kind of leads me to this particular topic, is that in continuous coverage, coverage has to be continuous from when it was in the non-special flood hazard area to your special flood hazard area. So it doesn't have to be a specific time period. So it doesn't have to be a policy that's been in effect for 20 years. Maybe the policy was purchased last year, it was in an X zone, and 2 weeks ago it moved into a special flood hazard area. As long as that policy was purchased in the non-special flood hazard area, and you can prove that it was then compliant over that map change or that change in flood zone, that is going to be our continuous coverage link. So that's kind of what you're looking for. For a pre-firm structure, so a pre-firm structure is built prior to your flood insurance rate map being completed. Typically, those structures are not able to grandfather because of built-in compliance, simply because most pre-firm structures are not compliant. And again, here's your structure that was built with a basement before your flood insurance rate map was available, before a basement was non-compliant. Usually continuous coverage is what your pre-firm structures have to rely on if they want to grandfather. Your post-firm structures really can use either reason. Typically, post-firm are going to rely on built-in compliance. But pre-firm don't have quite as much eligibility when that comes to that. So when you're grandfathering new business, we've been kind of talking about a policy that's in place. Now let's talk about a brand new policy. The premium that is calculated for that new business policy that's grandfathering is going to be based on the rates that were in effect at the time of construction, depending upon that flood insurance rate map. Again, the structure has to be built in compliance with those building codes, and it can apply to all flood zones. So let's say that we have a structure built in an AE flood zone, and it's a new business policy, and then it was quickly moved into a V zone. You can still grandfather an AE flood zone, perfectly acceptable to do that. If you have an existing policies, again, post-firm, pre-firm, both of those types of structures are eligible to grandfather according to our 2 reasons. Again, your rates are going to be based on the firm that was in effect when that policy was initially rated, and elevated structures have to be compliant. Whether it's enclosures, they have to be vented, but they also have to be compliant. If you're looking at a preferred risk policy and you're grandfathering, you cannot keep your preferred risk policy, but you can keep the nice X zone, rate it as a standard rated X zone, again, less expensive than if you had to rate it in your special flood hazard area, possibly obtaining an elevation certificate. But NFIP not allowing to stay in that preferred risk policy. I did have a question about what if the building is sold? I always suggest transferring a flood insurance policy. Yes, Even if your policy is grandfathered, it can still be transferred. So let's say that we have Grandma Pauline, who lives in Minot, North Dakota, purchased a flood policy in 1980 for her retirement home. It was a preferred risk policy, and Grandma Pauline kept that policy in place throughout the years, but Grandma Pauline was getting up in age, and so she went to a nursing facility, and their children were going to sell her structure. And her structure is now in an AE flood zone. Absolutely, you can transfer a flood policy. I suggest that. If your flood policy is grandfathered, I also suggest transferring that policy to a new owner. It can be cost effective to do that because the new owner is not going to have that continuous coverage. The new owner, if they can't use built-in compliance, is going to have to go straight to your elevation certificate, possibly those types of rating. So yes, you can absolutely transfer a flood policy, and it is a simple endorsement that you can do. So I know I have quite a few questions in our chat line, so let's work on some questions again, and then I'll go ahead and give you some resources. I answered the question about the building being sold. If you're selling the structure, you have grandfathering in place, make the flood policy part of that sale because in the long run, it's going to be cost effective for the new buyer. If you have a map change from an AE to a VE, yes, you can grandfather using your built-in compliance. You can grandfather using continuous coverage too. Grandfathering applies to a less hazardous flood zone moving into a more hazardous flood zone. Typically, we talk a lot about our X zone into our AE flood zone. That's the most common. But yeah, it can happen that you're changing from an AE flood zone into a VE flood zone. Peter has a super good question that's very timely. Does it have to be an NFIP policy to be grandfathered, or can it be from a private carrier? Peter, the NFIP does not consider the private flood policy when grandfathering. So let's say Grandma Pauline purchased that policy with the NFIP in the X zone. Then she got a better deal by moving to a private carrier. So she let her NFIP policy lapse. She purchased a private policy. Then that private company decided they weren't going to write in Minot, North Dakota anymore, and so she goes back to the NFIP. That is your lapse in coverage. Then Grandma Pauline has to start over with the brand new policy. The private policy does not count as being a policy in place. So here's my word of caution for that. If you have in your book of business those pre-firm structures, pre-firm built before your flood insurance rate map was in place, you might want to kind of investigate and think about if your private industry is really going to be a plausible consideration. You have to give all choices to your policyholder in that instance, because at this time, the NFIP does not recognize the private industry. So you kind of want to be informed for those pre-firm structures. That's when it's really the most hazardous. Audrey, if she was meaning if you were just purchasing the property. Audrey, I might need a specific example in that to make sure I'm answering what you're looking for. So give me the reasoning behind that. Peggy, can a pre-firm dwelling that has a PRP extended policy be grandfathered? Yeah, you can grandfather pre-firm structures. Continuous coverage is usually how that's done. While you can't, eliminate built-in compliance, it's just less common that your pre-firm structures are compliant. But yeah, you can totally grandfather a pre-firm structure. How do we agent of record a grandfathered flood policy only at renewal? You would want to definitely go ahead and work with the flood processing center for that particular scenario. You have to do one, and then you have to do the other. So you can, transfer the policy, and then you can go ahead do an agent of record, or you can use the other way around. But Peter, I would definitely suggest contacting customer service to do that particular process. Audrey, okay, yes. So Audrey, if you're just purchasing a property and you are purchasing it and it's already in that higher risk flood zone and you want a grandfather, then your only choice is going to be built-in compliance. So let me give you a couple of resources that I think you're going to find helpful. One of the resources is the National Flood Services website, and they're constantly working on that particular website. And there's some videos out there, some basic videos about grandfathering, just in case you missed something. If you want to contact National Flood Services, you can go down to the bottom of that website, contact us. There's a lot of information and phone numbers out there, customer service is there. You can go ahead and email customer service and they can help you through that process, especially if you're working on a process like Peter's, where you need to do an agent of record and a grandfather policy and transfer the policy. It's just more efficient to do it that way. Take a look in your agent tools under the video library. And in that video library, there are tons of flood topics out there. There's advanced flood topics. There's everything you can possibly think of that are out there. One of them, especially for this group, that I would suggest is go through the selling flood insurance and go through some of those tools that are out there for selling flood insurance. Flood insurance does not have to be confusing and difficult. Flood insurance can really help round out a nice book of business and make sure you're offering everything to your consumer that's really necessary. So that particular website is one I would highly suggest. I also always put the FloodSmart websites out here. FloodSmart really is the marketing arm for the NFIP. They also have a lot of resources out there. They have videos, they have templates that you can gain from or that you can access. Do I have any other questions? I think I got all of the questions. I don't have a chat partner today. It's just me. So certainly if I missed a question, please let me know. If at any time you do have any additional questions, you can send an email to agent.development@nationalfloodservices.com, and we can kind of answer any of those questions. Customer service is also available to answer those questions as well. Last call for questions. For a new purchase that was in an X zone and it's now in an AE, a VE, etc., higher risk flood zone, we cannot grandfather the X zone. The new buyer would have to go by the new zone. Kristen, it would be possible to grandfather. However, you would have to use built-in compliance. So if the person purchases the property within the AE flood zone, and they can track down their built-in compliance, so they would need the flood insurance rate map for when it was in an X zone. Yeah, you can go ahead and grandfather. You just can't use built-in compliance. Your pre-firm structures, if it was a pre-firm structure, if the structure is not in compliance, then they can't grandfather because of built-in compliance. Or if you have that pre-firm structure and they had continuous coverage and they didn't transfer the flood insurance policy, then you can't grandfather because it was built in compliance, because maybe the structure that's pre-firm isn't compliant. And if that flood policy isn't transferred, then you can't grandfather because of continuous coverage, because then you have a break in that coverage. Then grandfathering would be really off the market there. Audrey, so am I saying we cannot grandfather from a private market to an NFIP? Yes, I am saying that very specifically. At this time, the NFIP will not allow a policy to be grandfathered from a private market policy. It is NFIP policy only. Will that change in the future? It might. The NFIP is becoming a little bit more friendly to the private market, but at this time that is not allowable. Yeah, Rebecca, in our previous example, if you had that pre-firm structure that wasn't compliant but had a flood insurance policy, in order to keep that grandfathering, then that policy would have to be transferred in order to keep the grandfathering and to keep that continuous coverage without having a break. Some very good questions. Any other questions you'd like me to answer? Again, grandfathering, two ways to grandfather, either continuous coverage or built-in compliance. And built-in compliance means all of the rules and regulations set aside once that community joins the flood program have been met. Okay, I want to thank you all for joining me today. I hope it was helpful, even if just a little bit, even if you got a little bit information. Bill, Seller, explain, please. I don't understand the question, Bill. I might need just a couple more words because I don't understand the question on that. Previous question. Which previous question, Bill? I'm sorry, I'm not following your train of thought. Can I briefly explain how ICC coverage would be applied? Sure, Roy, I can explain ICC coverage. I won't take a ton of time, but I'll do it very briefly. ICC stands for Increased Cost of Compliance. So if you have a structure, you've had a loss on that structure, your structure is no longer compliant with your floodplain management regulations, ICC can pay up to $30,000 to get that structure back into compliance. However, your structure has to have repeated high losses. You have to have the community involvement. Your community has to have stipulations and bylaws and be involved in getting that structure back into compliance. And that money can only be used for rebuilding, elevating, demolishing, or floodproofing, and that's it. So that's how your ICC. And Bill wants to know Rebecca's question. So if you were the seller and you're going to transfer a flood policy, you're just going to go to the person who's buying your structure and say, Bill, I have a flood policy. It's currently grandfathered. Would you like me to include this in the sale of my structure? And what you need to do is have your agent fill out an endorsement to transfer the flood policy and to get the agent of record on that flood policy. Simple as that. Now, the NFIP is not going to regulate if they want the new buyer to purchase part of the policy, if they're just going to give that part of the policy. That's just between the buyer and the seller. But the endorsement is just simply an endorsement that's not collecting any money, that's changing the name on the policy to transfer, and or changing the agent of record. Karen has a additional, would my client, the building's owner, have to maintain their NFIP policy along with the tenant's private flood policy in order to qualify for grandfathering should the tenant leave? No, in that case, your building owner needs to maintain their NFIP policy. The tenant's policy is only going to cover the contents inside of that. So if you're going to grandfather, you're going to grandfather based on the building coverage, which is going to be that NFIP policy from your building owner. Karen, I'm surprised that your tenant took out building and contents. That's going to be a unique situation. Typically, your building owner takes out a flood policy. Your tenant takes out a policy for contents. So in that instance, Karen, you would want to work with customer service and make sure that they have a copy of the lease agreement so that they can see exactly the stipulations of that lease agreement, because that's out of the ordinary. All right, very good questions. Thank you, everybody. I think I've cleared everything up. Thank you again for joining me, and I hope you're all safe, and I hope you have a great rest of your day.